In this video, we are going to talk about a very simple trading method where you are going to only look for the trading pattern, break of market structure, and find an entry point. Sit back, relax, and learn. So we have said we are going to need 3 steps for us to find an entry, which is probably the high probability entry that we can get with these very simple steps. So the first thing is to identify a pattern, and a pattern in subject is basically a double top or an M in simpler terms. So in this case, we have first leg, right? Second leg, and then after the second leg, we wait to see the market breaking the market structure. So breaking the market structure is actually defined as breaking the neckline of our pattern. And mind you, this will be seen on the H1 time frame. In this case, we had an M pattern which you need to mark like what I've done so that it will be easier for you to see properly how the market is flowing. After the M pattern was issued, we can see break of this neckline zone, and then a retest of that neckline zone is where we actually enter the market, right? So a retest can be seen on the smaller time frames where you experience rejection candlesticks in the zone of the neckline, right? So let's have another example of a different case. The first thing is to mark your pattern, right? Where you clearly see these 2 legs, first leg, right? Then second leg, you can mark it like that, and then break of the neckline, right? So the neckline in subject is going to be this zone, right? After that neckline, we need to see the market breaking structure of that neckline to signify change or shift of momentum in a different direction. After that, we can see the market came and rejected that neckline and went our way. So at this point, that is where we were looking to get involved into the market, right? The next thing, we scout again for a proper pattern where we can actually label as I've shown you. This was beautiful M pattern, first leg, done on gold on H1 time frame, right? Second leg, like that, and then break of the neckline. In this case, the market actually broke the neckline, as you can see, after with this very strong bearish candlestick, and then the market came back to reject that same zone, right? We continue. In this case, we were going to see this as a double bottom where we have first leg, right? Then second leg. However, it was not tradable. Why? Because it did not meet our rules of entry. Our rules were requiring us to see the market breaking this neckline, but unfortunately, the market did not break structure to give us an entry point, right? At this point, can actually say this was now an M pattern, as we can see, first leg, second leg. After that, did we break market structure, right? This was the neckline, and after breaking the market structure in this retest, there was no rejection, and we later created another M pattern, which was first leg, second leg, and then a retest was issued. So basically, we are going to be looking for these patterns. In this case, we had a double bottom or a W pattern, right? After that, we can see the market looks like it is already broken market structure. So what are we now waiting for? we are waiting for proper rejection. In this case, we might have entered, and our stop loss should always be below the zone of our neckline, like that. So it's now up to the market to decide whether it's going to respect this zone and go to the upside, or it's going to go to the downside. On that note, we come to the end of this video. Thank you for watching. Like and subscribe. See you on the next one.